Welcome to the Deep Dive, where we cut through the noise to bring you the essential insights. Today, we're diving into the incredibly high-stakes world of biotechnology, specifically focusing on a company called INmune Bio. The global battle against Alzheimer's has been, well, a graveyard for countless drug candidates, costing billions with minimal progress. But what if the key isn't attacking the disease head-on, but rather reprogramming the body's own innate immune system to do the job? INmune Bio, they believe this is the path forward.
It's a fascinating, almost audacious question, isn't it? Is there science a true breakthrough, or are we looking at, yet another false dawn in a field notorious for them? Today, we're taking a really detailed look at INmune Bio, trading under the NASDAQ ticker INMB, with a current share price of $2.07 as of our analysis date, August 28, 2025.
And to give you a real sense of the stakes here, our deep dive reveals a truly, well, astonishing intrinsic value range. We're talking $1.50 to $15 per share. Right now, the stock sits near the low end of that range. This colossal valuation spread isn't just numbers, it's really a battleground of belief. The market's current $2.07 price shows the bears are, frankly, winning the narrative right now, despite insiders placing their own capital on a much brighter future. We'll be unpacking why such a massive disparity exists and what it could mean for anyone looking to understand this innovative yet incredibly risky company.
What's fascinating here is how much is riding on just a few critical assumptions, and we'll walk you through those. We're approaching this with a long-term value investing mindset, but adapted for the high-risk, high-reward landscape of clinical-stage biotech.
All right, let's kick off our first major segment. We're calling this Chapter 1, Business Understanding. At its core, what exactly does INmune Bio do?
Okay, so INmune Bio is a clinical stage biotechnology company, and that's a critical distinction for your listener. Their business model isn't built on current sales or profits, not at all. Instead, it's all about the potential future value of their scientific discoveries. Think of them as basically a research and development lab that happens to be publicly traded.
So no product sales yet. How do they create value in that environment then?
Right. Value here is created through hitting clinical milestones, things like successful trial results, positive safety data, and ultimately, regulatory approval for a new drug. For example, for the 12 months ending June 30, 2025, their revenue was nominal, $50,000, primarily from grants, not product sales. This means they are entirely dependent on capital markets to fund their operations. Completely.
Okay, so tell us about these scientific discoveries. What are their key products and platforms? They're not just a one-trick pony, right?
No, definitely not. Their pipeline is built on 3 distinct technology platforms, all targeting the body's innate immune system. It's crucial to remember this diversification. First, there's the dnTNF platform. This is their flagship, using a novel dominant negative technology. The lead candidate here is XPro 1595, or XPro. It's designed to selectively neutralize bad soluble tumor necrosis factor, that's TNF, medullary driver of chronic inflammation, while leaving the good transmembrane TNF, TMTNF, unaffected. And that's crucial because most current anti-TNF drugs, they can't differentiate. They cause broader immune suppression, unwanted side effects. XPro targets neuroinflammation in diseases like Alzheimer's and treatment-resistant depression.
Okay, that sounds very specific. What's the second platform?
Second is the INmune platform. This is an innovative immunotherapy for cancer. It aims to prime a patient's own natural killer cells, NK cells, inside the body, turning them into cancer memory-like cells to eliminate cancer. This offers a potentially safer and simpler alternative to complex ex vivo therapies like CAR-P. CAR-T involves taking cells out, modifying them in a lab, putting them back in. INmune avoids that complexity. It's being tested right now in metastatic castration-resistant prostate cancer.
Interesting. And the third one?
And third, the CordStrome platform. This utilizes mesenchymal stromal cells, MSCs, from human umbilical cords. These cells have immunomodulatory and wound healing properties. The lead application is for recessive dystrophic epidermolysis bullosa, or RDEB, which is a terrible, rare genetic skin disease. This platform is, I think, really worth keeping an eye on. It could be a kind of lifeboat asset with a potentially faster path to market.
That's a lot of cutting-edge complex science. What about their market position and scale in this huge biotech world? They sound pretty small.
They are. They're a microcap company. Market capitalization between $55 million and $68 million. Tiny, really, in the grand scheme. Their scale is small, focused entirely on R&D. They rely on partnerships for manufacturing, like with the UK's cell and gene therapy catapult, as they lack that commercial infrastructure.
So their central value proposition, as I understand it, is this novel scientific approach. Reprogramming the innate immune system to treat the root cause. What does this specifically mean for Alzheimer's?
Exactly. For Alzheimer's, this is a significant departure from the long-dominant amyloid beta hypothesis, a really big shift. They're focusing instead on neuroinflammation, which many now believe is a critical, perhaps even primary driver of the disease. This precision medicine strategy is key to their potential across all platforms. For X-Pro, it's about a smarter, more targeted attack in Alzheimer's, focusing on patients most likely to respond. That increases their odds of success where a broader approach, well, it already failed them.
Thinking about the broader industry, what are the market trends and growth potential for a company like this?
Well, they're sitting right at the intersection of some powerful trends. Advancements in cell and gene therapies, personalized medicines, and the renewed focus on neurodegenerative diseases. The market opportunity is, frankly, immense. The neurodegenerative disease market alone was $59 billion, roughly, in 2025, projected to reach over $83 billion by 2030, and Alzheimer's accounts for over 42% of that. A successful therapy here would undoubtedly have blockbuster potential. Huge.
But I imagine that blockbuster opportunity is matched by profound risk, especially with AD drug development having over 99% failure rates historically. That number is just staggering.
Precisely. It's brutal. And the competition is intense. For Alzheimer's, they're up against giants like Eli Lilly, Biogen, Eisai, real heavyweights. While current treatments are shifting toward anti-amyloid antibodies like Eisai's Leqembi, INmune Bio's X-Pro aim to differentiate by targeting neuroinflammation. And critically, with a reported absence of those dangerous ARIA side effects, that's amyloid-related imaging abnormalities like brain swelling or bleeding, a significant concern with some existing treatments.
Right, that safety profile could be a major advantage. And what about their other programs, like in oncology?
In cancer immunotherapy, INmmune's unique in vivo mechanism activating NK cells directly in the patient could offer advantages over ex vivo CAR-T therapies. Advantages in terms of safety and logistical simplicity. It's a very different approach in a rapidly evolving field.
What are the regulatory hurdles and barriers to entry for a company like this? It can't be easy.
No, it's incredibly tough. The FDA and international bodies are stringent gatekeepers, very strict. Navigating multi-phase clinical trials under good clinical practice guidelines, basically. Rigorous testing standard, it's long, it's costly, and deeply uncertain. However, given the high unmet needs, they do plan to pursue expedited pathways where applicable. Barriers to entry are incredibly high. You need profound scientific innovation, robust intellectual property, and access to vast amounts of capital. INmune Bio's patent portfolio is a key barrier they've established against others jumping in.
So their competitive advantage isn't really about brand recognition or cost advantages, since they're so small in clinical stage. It's all about the unique assets and the science itself being different.
Absolutely. Their IP portfolio and the novel scientific hypothesis underpinning their platforms are their primary unique assets. That's the core value. The ability to selectively neutralize bad STNF while preserving good TMTNF is a key differentiator. If validated in late-stage trials, that's a durable advantage, a real edge.
But the true crucible, the real test for this ambitious scientific thesis, came with the recent clinical results for their lead Alzheimer's candidate, X-Pro. What did they reveal and how did it impact the company?
Well, the phase 2 mindful trial did miss its primary endpoint in the broad patient population. That's a significant setback for any flagship drug. No way around that. However, it also showed a positive signal in a predefined subgroup of patients with high levels of inflammation. This forced a strategic pivot, a major one. The initial hope for a blockbuster drug for all early AD patients is now narrowed to a more targeted therapy.
So the risk profile has definitely changed. Given this significant pivot for X-Pro, how does that reframe our view of the other two platforms? Do they now carry more of the company's immediate hope, maybe?
They absolutely do. This is where that three-platform structure provides crucial internal hedging. The market, as we'll see, is intensely focused on the Alzheimer's data, naturally. But the INmune Cancer Program and the Cordstrom Rare Disease Program, they're based on different biology and different timelines. So a complete failure in AD wouldn't automatically render the others worthless. Not at all. You're looking at a portfolio of high-risk, scientifically distinct assets that now, frankly, become even more important to watch.
Okay, let's turn our attention now to the individuals at the helm of this company. This is Chapter 2, Management Evaluation. What does their leadership look like, especially with those recent changes you mentioned?
Right. INmune Bio actually underwent a pivotal leadership transition just now, in August 2025. And it was a direct consequence of those mixed clinical trial results. Dr. R.J. Tissy, who was a co-founder and the CEO for nearly a decade, he retired.
Retired. And who stepped into that demanding role?
His replacement is David J. Moss, who was the company's CFO, since 2015. Mr. Moss's background is in corporate finance venture capital. This change represents a classic move from the playbook, really. When a company faces a crisis like this, you often see a shift towards financial leadership.
So replacing a scientist position with a finance-oriented CEO sends a pretty clear signal, doesn't it? What does that tell us about their priorities now? Is this a sign they're maybe shifting away from the pure science aspect?
It signals a very clear shift, I think, towards financial stewardship, capital efficiency, and charting the most viable strategic path forward. Survival, basically. The new CEO's mandate is likely less about broad scientific exploration and more about preserving capital and maximizing shareholder value from the existing pipeline. It's probably more about execution and hopefully commercialization rather than pure discovery at this point.
How transparent has management been, especially in the wake of such challenging news? That's always critical.
Well, they maintain regular communication through press releases, SEC filings, standard stuff. After the mindful trial data, their communication was, I'd say, transparent about the top-line failure. They didn't hide it.
Yeah.
But they also strongly emphasized the positive signals in that enriched subpopulation. They really hammered that point home. They also have a formal code of ethics, and our research didn't find any indications of ethical lapses, which is good to see.
Let's talk about capital allocation. How does INmune Bio use its money? Where does it go?
Their strategy is pretty straightforward. Virtually 100% of capital is reinvested into R&D to advance their clinical pipeline. That's it. For 2024, R&D expenses were $33.2 million, up significantly from $20.3 million in 2023. So spending is increasing.
And as a pre-commercial company, they're not doing M&A or share buybacks, right? That wouldn't make much sense.
Correct. No M&A activity, and they've never paid a dividend nor engaged in share buybacks. That's entirely appropriate for their stage. Every single dollar is precious for drug development.
What about return on invested capital, ROIC? It's usually a key metric we look at.
Yeah. Standard ROIC calculations just aren't meaningful here, not for a pre-revenue loss-making company like this. Their ROIC is deeply negative, structurally so. The key measure here is really their ability to raise sufficient capital on the least dilutive terms possible to keep advancing those clinical programs. That's the real test.
The former CFO, now CEO David Moss, he championed a simple capital structure. What does that mean exactly, and what are the implications for potential investors?
Right. He prefers clean capital structures, basically favoring common stock over complex financial instruments like warrants or convertible debt. This generally aligns management and shareholder interests better, which is a positive. But he's also acknowledged that this inflexibility can sometimes limit the size and type of investors they can attract. Some funds prefer those more complex structures. It's a critical trade-off, really, for a company that's entirely dependent on external funding.
Okay, let's move on to Chapter 3, financial analysis. For a clinical stage biotech, traditional financial metrics behave very differently, as you've said. What should we really be looking at here?
We absolutely need a different lens. You can pretty much ignore traditional growth and profitability metrics. They're irrelevant right now. Their revenue is negligible, erratic. Profit margins are deeply and structurally negative. These operating losses, like the $42.6 million loss in 2024, they're actually planned investments in future growth, not a sign of business failure in the traditional sense. So our focus shifts entirely to the balance sheet and the cash flow statement to assess liquidity and solvency. Can they pay their bills? How much cash do they have left?
Okay, so what then is the most critical financial metric for a company like INmune Bio?
It's their free cash flow, or more accurately, their cash burn. Think of their cash balance like a fuel tank in a car with no way to refuel easily. Without product sales, they're constantly burning fuel cash to drive the clinical trials forward. And that tank needs refilling every few quarters through financing. This burn has been consistently negative and growing. It was $89 million back in 2020, rising to negative $32.2 million on a trailing 12-month basis in 2024.
That leads to the crucial question. How long can they survive on their current cash reserves? What's the runway look like?
Right. As of June 30, 2025, they had $33.4 million in cash. With quarterly operating expenses running around $8.1 million in Q2 2025, this implies a cash runway of roughly 4 quarters. So that extends operations into 2026, just barely. This runway dictates the urgency. They absolutely need to achieve value-creating milestones within the next year to enable the next round of financing on decent terms. The clock is ticking.
You mentioned earnings are consistently negative, but is there anything in the recent earnings report that's a particular red flag beyond just the ongoing burn?
Yes, actually. The Q2 2025 net loss of $24.5 million included a significant one-time non-cash impairment charge of $16.5 million. This was related to acquired in-process research and development intangible assets. Now, that's a major accounting red flag. It's management essentially saying, on the books, we believe the future economic benefit from at least one of our past acquisitions or research programs is now less than we previously thought. Inga. They had to write down the value of some of their research assets. That's not a good sign.
Okay, that's definitely something to note. Let's talk about financial stability more broadly. How's their debt situation?
Very strong, actually. That's a positive. They have minimal debt, just $0.45 million against nearly $29 million in equity. That results in a negligible debt-to-equity ratio of 0.02, almost nothing. This was a strategic choice. They paid off their term loan from Silicon Valley Bank back in December 2024, specifically to de-risk their balance sheet. Smart move, probably.
And short-term liquidity, can they cover immediate bills?
So robust. They had a current ratio of 4.12 as of June 30, 2025. That means they have plenty of liquid assets, mostly cash, to cover their short-term obligations. No immediate liquidity crisis there.
Now to valuation. How on earth do you value a company with no earnings or meaningful revenue? Traditional metrics like PE are useless here.
Yeah, absolutely right. PE is useless. Forget about it. Price to book, PB, is about 2.0x.
Yeah.
That suggests the market values their assets, mostly cash and that intellectual property, at roughly twice their accounting value. Okay, maybe somewhat useful context. But the most common and theoretically most robust method here is a discounted cash flow, or DCF, analysis.
Right. Can you quickly explain the DCF concept for a listener? It can sound complicated.
Sure. A DCF analysis basically tries to estimate a company's intrinsic value today. It does this by projecting all the potential future cash flows its products might generate way out into the future, from development through peak sales. And then it discounts all those future potential cash flows back to their value in today's dollars. You discount them because future cash is uncertain, and money today is worth more than money tomorrow, the time value of money.
Okay, makes sense. And what does an educational DCF model tell us about INmune Bio? What's the output?
Well, it produces that incredibly wide intrinsic value range we mentioned right at the top, $1.50 to $15 per share. This extreme range, it truly reflects the binary hit-or-miss nature of drug development in biotech. You either get a home run or you strike out completely. The DCF captures that huge uncertainty.
So what are the key assumptions driving such a wide range? What makes it swing from $1.50 to $15?
Three main things, really, big ones. First, probability of success. What are the actual chances that XPro, INmune, and Cordstrom will get approved by regulators? This assumption took a big hit, lowered significantly after those mixed XPro results. Second, market size and peak sales. What's the true addressable market for XPro, specifically in that enriched AD population? And what market share can they realistically capture? That became much harder to estimate. And third, the discount rate. Because of the extreme risks involved in microcap biotech, recent clinical setback, you have to use a very high discount rate in the DCF. We're talking 20–25%, maybe even higher. That heavily penalizes future potential cash flows.
All right, let's shift gears and explore Chapter 4, market sentiment. How is the market actually reacting to all this information, particularly that mixed clinical data and the subsequent changes?
Well, the professional analyst community is deeply divided on INmune Bio's prospects, really split. And that's a direct result of those ambiguous mindful trial results. No surprise there. We see an exceptionally wide range of 12-month price targets from analysts. It goes from a really pessimistic low of 60 cents, basically saying it's almost worthless, up to a highly optimistic high of $23.
Wow, that's quite the spread. The average price target you mentioned is around $9.65, which suggests significant upside from the current $2.07 price. But given that huge range, how much faith can we really put in that average?
Exactly. You've hit on the core issue. That average number masks a profound lack of consensus. It's almost meaningless on its own. The average brokerage recommendation, or ABR, it sits at 2.43. On a 1 to 5 scale, where 1 is strong buy and 5 is strong sell, 2.43 technically translates to a hold, but it's an average of some extreme buys and some strong sells or underperforms. It's not a lukewarm consensus, it's a polarized view. And this sentiment has deteriorated significantly from just 90 days prior when it was a firm buy. Several firms formally downgraded the stock after the news broke.
What's been driving the news cycle for them recently?
The Q2 2025 earnings release was the big one. It bundled everything together. The trial results, the CEO transition, the financial update, that impairment charge. There's a lot to digest. Media headlines, naturally, often focused on the negative. Missed primary endpoints, widening losses. though they usually did include management's more hopeful commentary on the potential in that subpopulation data further down in the articles.
And what about market indicators, particularly short interest? That's always a telling sign of negative bets.
Yes, and the short interest in INmune Bio is a powerful and, frankly, unambiguously bearish signal right now. As of late July 2025, it stood at an extremely high 34.98% of the float. Now, for our listeners, the float refers to the shares available for public trading. Anything above 20% is typically considered very high and a sign of widespread negative sentiment. So 35% indicates a very, very significant portion of the market is actively betting on further price declines. They're borrowing shares to sell them, hoping to buy them back cheaper later.
That's a huge number. And where does the stock price stand relative to its moving averages? Technical picture.
Also bearish. As of the analysis date, the $2.07 stock price is trading below its 50-day simple moving average, which was $2.43. That's generally considered a bearish short-term trend signal. The long-term trend is also clearly bearish. The stock is significantly below its 200-day simple moving average of $2.55. So technical analysis confirms a sustained long-term downtrend is in place.
Okay, let's move to Chapter 5. Ownership structure. Who actually owns INmune Bio? Who holds the shares?
Well, institutional ownership, meaning big funds, mutual funds, pension funds, it's relatively low, around 22.57% of shares outstanding. This is pretty common, actually, for high-risk microcap biotechs. They often fly under the radar of the big institutions or are just too risky for their mandates. Top holders include names like BlackRock and Vanguard, but their ownership is often passive, simply because INMB is part of a broad market index fund they track, not necessarily an active bet on the company.
Okay, low institutional interest. What about insiders, the people closest to the company, the executives, the directors, who truly know the day-to-day details? What are they doing?
Now that's where it gets interesting. In stark contrast to the low institutional ownership, insider ownership is high, very high for a public company. The former CEO, Dr. R.J. Tissethi, owns about 5.8% of the company, and the current CEO, David J. Moss, the former CFO, owns about 4.8%. This shows significant skin in the game. Their personal wealth is heavily tied to the company's success. That's a strong alignment with shareholder interests.
That is a powerful signal, especially when the broader market is so bearish as shown by that short interest. Have insiders been buying or selling recently? That's the key question.
Most tellingly, insiders have been net buyers of the stock over the past year. Our data shows 3 open market purchases and 0, absolutely 0, recorded sales by insiders. Both Dr. Tessie before he retired and Mr. Moss bought shares back in September 2024 using their own capital. On the open market, this is a strong, tangible signal. It directly contradicts the bearish market sentiment reflected in the short interest and analyst downgrades. It suggests that those with the most information, the insiders themselves, believe the stock is significantly undervalued at current levels. And given these high insider holdings and the positions of the top institutions, ownership is actually fairly concentrated. This gives key insiders significant influence over the company's direction. For you, the long-term investor, this insider conviction, demonstrated by actual buying and their alignment with shareholders, can be a really big positive factor to consider, especially when weighing it against the market's negativity.
Okay, now for Chapter 6, risk assessment, where we'll do a quick SWOT analysis, strengths, weaknesses, opportunities, threats, to summarize the internal and external factors at play. What are INmune Bio's core strengths, despite that recent setback?
Right, looking at the strengths. First, their novel scientific platforms. It's a genuinely differentiated approach targeting the innate immune system that's unique. Second, the pipeline diversification. Having 3 distinct programs, DN, TNF, INmune, Cordstrom, offers important internal hedging. One failure doesn't sink the whole ship, theoretically. Third, their precision medicine approach, using biomarkers to target specific patient populations, particularly now with XPro. It's a smarter, maybe more feasible strategy. And finally, as we discussed, they have a strong balance sheet right now. Robust cash position and virtually no debt provide a crucial financial cushion, at least for the next year or so.
And on the flip side, what are their key weaknesses? Where are they vulnerable?
The biggest one, undeniably, is the pivotal clinical setback. The flagship XPro Alzheimer's program missed its primary endpoint in the broad population. That's a major blow. Second, their financial vulnerability. They're pre-revenue, entirely dependent on capital markets, and have that consistent, significant cash burn.
Right.
They need more money eventually. Third, their lack of scale. They're a tiny organization compared to the big pharma companies they compete against, fewer resources, less infrastructure. And finally, there's some leadership uncertainty. The CEO transition happening right during a strategic crisis introduces execution risk. Can the new finance-focused CEO navigate these scientific and clinical challenges effectively?
What are the opportunities that lie ahead for them? Where could things go right?
Well, they're targeting large unmet medical needs. Alzheimer's, cancer, rare diseases. These are massive markets with desperate need for better treatments. The potential payoff is huge. For XPro specifically, there's now a niche strategy opportunity. Pursuing approval just in that biomarker-defined AD population could still lead to a valuable product, even if it's not the original blockbuster dream. Critically, Cordstrom commercialization for that rare skin disease, RDEB, offers a potentially faster path to market. Filings are planned for mid-2026. This could be their lifeboat asset, providing crucial early revenue and validating the company's ability to get something approved. And across the board, their novel technologies could always attract partnership and acquisition potential. A larger pharmaceutical firm might see value in their science and decide to partner or buy them out.
And finally, the threats both general to biotech and specific to INmune Bio. What keeps management awake at night?
The biggest threat, always looming in biotech, is the inherent binary clinical risk. The high probability of trial failure for any drug candidate, no matter how promising the early science looks. Even with positive data, regulatory hurdles are significant. There's absolutely no guarantee of FDA or other agency approval. They face intense competition from larger, much better funded companies in all their target areas. Financing risk is paramount, as we've stressed. The company's survival literally depends on raising additional capital on acceptable terms before their current cash runs out. Beyond that, you have macroeconomic factors. Things like high interest rates make investors more risk-averse, especially towards speculative biotechs, and they increase the cost of capital. Inflation can also drive up clinical trial costs unexpectedly, and maybe even geopolitical factors. For instance, the recently mentioned U.S.-imposed tariffs of 2025 on pharmaceutical and clinical trial imports could potentially increase R&D expenses, shortening their already limited financial runway.
Okay, we've covered a lot of ground. We've reached Chapter 7, conclusion. Let's try to synthesize all these findings. What's the strongest bull case for INmune Bio right now? Why might someone be optimistic?
The bull case essentially argues the market is being overly pessimistic and is missing the bigger picture. Key points are, first, that contrarian insider signal. Top executives are putting their own money into the stock, showing a strong belief in undervalued potential. That's hard to ignore. Second, and potentially undervalued pipeline. The argument is the market might be too focused on the Alzheimer's setback, overlooking the real potential in INmune for cancer, and critically, Cordstrom's near-term commercialization path for RDE. Third, a viable niche in Alzheimer's might still exist. XPro did show a positive signal in that specific biomarker-defined population, which could still lead to a valuable, albeit smaller, product. And finally, financial solvency, at least for now. A strong, debt-free balance sheet with cash to fund operations into 2026 gives them time to execute.
Okay, that's the bull view and the bear case.
Yeah.
What are the strongest arguments for skepticism or pessimism?
The bear case is pretty straightforward, and you have to admit, potent right now. First, clinical failure and uncertainty. The flagship Alzheimer's trial missed its primary endpoint. That's a major setback, full stop. The subsequent CEO change adds execution risk during a critical period. Second, overwhelmingly negative market sentiment. You have a clear long-term downtrend in the stock price and that extremely high short interest of nearly 35%. The market is actively betting against them in a big way. Third, financial headwinds. There's the consistent cash burn, a tough macroeconomic environment for biotech funding in general, and that $16.5 million impairment charge on their pipeline, which is an explicit acknowledgement of diminished value by management itself. And finally, just the high-risk industry itself. Biotech investing is inherently risky, with incredibly high trial failure rates. INmune Bio is no exception.
So let's bring it back to that valuation range. What does our estimated intrinsic value range of $1 and $15 per share ultimately tell us in the context of the current share price sitting down at $2.07?
Well, the current share price, sitting near the low end of this incredibly wide range, tells us something quite clear. It suggests that the market is currently assigning a very, very high probability to the bearish scenario playing out. It seems to be largely discounting the potential upside from INmune Bio's diversified pipeline, especially the non-Alzheimer's assets like INmune and Cordstrom. It's a clear signal of deep skepticism and perhaps fear prevailing in the market right now regarding this stock.
So what does this all mean for you, our listener, trying to make sense of this?
Look, an investment in INmune Bio at this particular juncture is undeniably a high-risk, potentially high-reward proposition. There's no sugarcoating the risk. It's essentially a bet that the market's current deep pessimism is overblown, a bet that management's confidence, evidenced by their own stock purchases, is well-founded
Right.
and based on data we don't fully see yet, and ultimately a bet that the novel science behind at least one of its three distinct platforms will ultimately be validated by clinical and regulatory success down the road.
And here's where it gets really interesting, I think. When you're faced with these conflicting signals, clear scientific setbacks, overwhelming market skepticism, yet unwavering insider conviction who truly understands the long-term value, especially in a landscape with such incredibly high stakes and profound uncertainty. What factors do you, as an observer or potential investor, weigh most heavily when the so-called experts, the market, and the insiders disagree so widely? That's something to think about long after this deep dive ends. And that wraps up our deep dive into INmune Bio. We hope you feel much better informed and perhaps, a little more intrigued by the complexities and the drama of clinical stage biotech.
Absolutely. Our goal is always to help you cut through the noise and get to the most important nuggets of knowledge, the key drivers of value and risk.
If you enjoyed this analysis, please do like and subscribe to the Stock Analytics AI YouTube channel. It really helps us out. And remember, for just $4.99 a month, members get priority deep dives on tickers you request. Plus, over the next few months, we're actually covering all of the S&P 500 stocks, and members get exclusive priority access to those analyses. If you just like a one-off deep dive on a specific company, you can always drop us a super thanks on YouTube.
And just before we go, please remember the important disclaimer. This analysis was generated by an AI system for educational and informational purposes only. It should absolutely not be considered financial advice. Investing involves risk. Always conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions.
Thank you for joining us on the deep dive. We'll be back soon with another fascinating exploration.